Hello, welcome to Super Return Asia. I'm Sarah Clark, joining you from Hong Kong, and today I'm talking to Jessica Archibald, who's the Managing Director of Top Tier Capital Partners. Thanks for joining us.
Of course.
Let's talk about the subject of manager selection in venture capital. How do you identify the next set of star players?
Yeah, so we're always looking for the best performing managers globally, whether they're new or more established. So we look for two things really. One is a track record. Whether they have invested with this same team before, or whether they've invested their own money or for a different pool of capital. And then we also look for more qualitative aspects of it. Do we trust the manager? Do they have the best deal flow? What value do they provide to the entrepreneurs? So we look for a balance of those two.
Is smaller better when you're trying to kind of hunt down or identify?
Yeah, that's a big debate in our industry. A lot of people will say smaller is better, because the math works better. Smaller fund, so easier to deliver the outsized returns. But there's also some large venture funds globally that have performed just as well. So I think it still comes down to, do they have the best access to the best entrepreneurs, the best deal flow?
Okay. How do LPs find managers that can access the next wave of tech companies, and how can LPs assess the risks associated with each different strategy?
Sure. I mean, it's hard to find the next generation. Even if you do find them, it's hard to convince them that they want you as an investor, right? So we try to invest kind of one fund before they become really popular, because once they're popular, they're oversubscribed, it's hard to get access, right? So taking a risk on a next generation manager is important, and so having that faith that you believe they can return the profile that you need. So for us to find those, it's a lot of relationship building, word of mouth. Tends to be newer managers who are spin-outs of some of the bigger established venture firms. So you might know them from that venture firm, and then they're going to raise their own. But yeah, it's being local is very important, right? It's all relationships. So
with the large majority of venture capital returns coming from a smaller number of deals and more startup capital on the table, is that power dynamic, is that shifting?
Yeah, I would say some of the managers that have performed very well, they have the power, right? They have the power over investors. They can decide which investors have access to their fund. They also hold the power over the entrepreneurs, right? Because success begets success. So if an entrepreneur wants to go to a particular venture fund because of the success they've had taking companies public or investing in large-scale businesses, it's still the venture firm that's going to decide, am I going to give you a term sheet or not? And so that's definitely where the power lies. Now there's a part of the market that is the next generation of venture fund, just like the next generation of entrepreneurs, where it depends. It's unclear who holds the power. And so I think that still kind of goes back and forth.
Increasingly we're hearing of the startups choosing the VCs as opposed to the other way around. Is this a growing trend, and why?
In parts of the market it is a growing trend, absolutely, because you have to think of, everybody's money is the same, right? It's a currency. And so what comes with that currency? If I'm a venture capital firm, am I providing introductions to potential acquirers, introductions to potential consumers? Am I providing advice on how to grow your business? Am I going to help you hire your next 10 people? So all of that is the value add that comes beyond just the capital. So a lot of entrepreneurs will go interview the venture funds. It's not just who's going to pay the higher price.
Okay. VCs looking to differentiate themselves based on the fact that there's so many competitive pressures to identify and win over the most sought after deals. And if so, how are they differentiating?
Yeah, again, it comes a little bit back to that value add. What can they bring to the table more than just the money? But I think in today's market, there's also an element of, how consistent of an investor can that venture fund be? So if they have a growth fund or an opportunities fund, if they can support these companies from their initial investment all the way through to the exit of the company, that's going to be valuable to the entrepreneur.
Okay, based on these competitive pressures, is it a case of the VCs pushing or looking to disrupt other more traditional kind of investment markets?
Yeah, there has to be some part of that, right? I think if you look just by the stage of investment, right? The early stage VCs are disrupting the late stage VCs, right? SoftBank coming into the very later stages is disrupting the early stage and disrupting venture. I think if you look by sector, who would have thought 10 years ago that there'd be a handful of companies disrupting the taxi industry, right, with Uber and Lyft and Didi and all of those. So now we're seeing it with the healthcare system in the US that's being disrupted. Financial services, fintech is still, globally being reinvented. So I think there's disruption everywhere all the time. It's a matter of, can you make money at it in the right amount of time? And
which markets are showing the increasing kind of power for 2019? Not necessarily the individual companies, but who are the markets to watch?
Geographically, Europe. We find Europe really attractive. It's kind of like China venture 10 years ago, where you have some very smart people, very smart software developers, engineers, now venture capitalists that have seen up and down markets, and they've started multiple companies or they've invested multiple venture funds. So we think that's a really attractive market right now, hopefully for a while into the future, but lower cost of starting a business, which then means the valuations are a little bit lower in the early stages. If you're still selling your business or your service globally, your revenues are global and growing just as fast as any other company, so you could still sell the business for a good multiple. So we like Europe for that reason. We still like Asia. It's a large economy, you can't ignore it. And then in the US, it depends on different pockets. Later stage US companies are definitely seeing increased valuations, and I think that's bringing some kind of cautious optimism.
What about the rise in China? I mean, there are numerous star players flooding the market in China.
Yeah, there's a lot of capital here, a lot of venture funds being started, right? Whether they're US dollar denominated funds or RMB funds. And I think with any market like that, if there's too much money that comes in too quickly, there's a little bit of a concern. But the best rise to the top. And so there's always some noise, whether it's companies or venture funds or even investors, but I think the best will rise to the top here as well.
Jessica Archibald, thank you very much for joining us.
Yes, of course, thank you.
Thank you for joining us, and if you want to watch more of these conversations, you can find us on Twitter. Just look for #SRAsia. See you next time.